Hello and welcome to the Fintech Finance Virtual Arena. Today we're going to be discussing the future of payments, what lessons we can learn from the banks, the tech providers, and really where it's going to be heading in the next couple of years. So joining me today, I have Brian McKenney, the CIO at HSBC. So Brian, how are you doing this morning? All good with you?
Things are great. Thank you, Doug.
Absolutely brilliant. And we have Paul Chandler from Compass Plus. Paul, how are you doing this afternoon for you?
Hi, Doug. Brian, good afternoon. Delighted to be here today.
Excellent. Well, to kick things off, to give our viewers a bit of background, in the years leading up to the pandemic, I don't want to focus too much on the pandemic, but I think it's still pretty important seeing how much payments have changed. So in the years leading up to the pandemic, what would you say, Brian, were maybe some of the biggest changes in payments infrastructure, maybe just general advancements in the payments scene?
Thanks. I think the biggest and most profound has been the proliferation and extension of real-time payment schemes or faster payments, depending on which market you're in. This sort of started in the UK about 10 years ago, and it's now spread across to a number of new markets. And most of those markets, when they take it up, they've taken the concept further and enabling a whole host of new solutions and customer experiences, and really up the bar in terms of what customers can expect from payments. With that, there have also been some advancements in open banking regulation that actually fits quite nicely with what faster payments can enable. And I think the third I would highlight is something that SWIFT has worked on for international payments that they call GPI, or Global Payments Innovation. And that allows for a tracking of cross-border international payments. Think about a DHL tracking number for your international payments, which didn't exist. You used to send it and you never knew if it really got there. And now it comes with an end-to-end tracker. And that's been actually a really big advancement for international cross-border payments.
Yeah, I completely agree. And having that visibility is so key for a lot of businesses. And Paul, could I also get you to chime in? Do you agree with Brian there that it's been that combination of customer demand, visibility from SWIFT? Do you think those have been the key changes in recent years?
I think Brian really summed it up very nicely. And I totally agree. Faster payments, immediate payments has underpinned nearly everything that's happened. Most of the significant changes over the last 10 years. We've seen also the rise in mobile payments and paying mobile apps, and more recently the enhancements and the acceptance of contactless payments, becoming, I think, ultimately to become the most ubiquitous payment methodology by the consumer today. It has to be said also that open banking and the use of APIs, the proliferation of APIs now today across our domain, is welcome, I have to say. I mean, it's a common standard. It enforces interoperability and interconnectivity at a global level, making it easier for banks and fintechs simply to think outside the box and create new payment methodologies and new ways for their clients to interact with them. So I think that's been a big game changer as well. But the cloud, as Brian says, the cloud is the ubiquitous technology game changer in this last decade, unequivocally. Software as a service, platforms as a service, payments as a service, banking as a service, fintech as a service, et cetera, et cetera. It's changed the way we do business. It's enabling challenger banks today to sprint to market with zero footprint, unlike the banking giants who are still hampered with legacy platforms, limited ability to innovate, or indeed meet any of the consumer demands that are required today in any speed at all. It is a shame for them.
Interesting. So, Paul, if I could stick with you just for the next question then. If you've seen this customer demand over the last couple of years for innovation in payments, why would you say that typically, I mean, you could almost say that payments didn't exist, for instance, 20 years ago as its own industry. So why is it now that banks and potentially the large payment fintechs have been typically slow or reluctant to kind of upgrade their payments platform to enable these innovations?
Well, I think it's fair to say that I don't think that it's not that they don't want to. I think they all want to. They realise they need to in order to survive. But however, the whatever they've inherited over these years, for the last 30 years, its legacy is draconian, it's outdated. But it was always a premise that these systems would have to integrate and talk with one another since inception. I mean, the concept has always been very straightforward, but the actuality of it is extremely complex. I mean, FIs that still live under the mental that if it ain't broke, don't try and fix it, are suffering today. I mean, the realization that their whole engine, their whole core business process is not fit for purpose. The realization of that it's not fit for purpose, that it's obsolete. You know, at the heart of their technology footprint is a legacy platform that's, you know, unfortunately perpetually suffering from downtime, or more importantly, requires high maintenance and associated with high costs. It needs typically, you know, the technology stacks become obsolete, you know, very, very fast. So this comes at a time when the exact opposite, in my view, is required of the banks. You know, we're in a consumer-driven market for the first time that's driving us as opposed to us driving them. That's the game changer here. You know, the worm has certainly turned. And so, you know, the inability for the banks to react is hurting them. And it's not that they don't know it. It's not that the intent isn't there for them to change. It's just that, you know, the mentality of these timeframes, we do it over a period of 5 years. That's not really, we know that's the way they work. And they're desperately trying to get out of that modus operandi. However, it's not reflected in what's happening on the market, and consumers see that. And of course, if the banks don't adapt, if they don't change, if they don't embrace new technology and to enable them to achieve go-to-market strategies faster and in real time, invariably, then you know their very customers will march with their feet. They will vote with a click and move on to the next bank that's offering these all singing, all dancing apps and real-time payments capabilities.
Interesting. And Brian, obviously, you have experience over in Hong Kong with leveraging different kind of payments platforms within a larger bank. You know, what was that like, looking at new platforms to kind of jump off and kind of advance your payment abilities far beyond maybe the kind of mother brand?
That's a great question. And there's a real opportunity. There's sort of like two ways to think of payments in this space. So one is the actual payment infrastructure, you know, the plumbing that ensures that customer transactions are fulfilled compliantly, that settlement takes place, that the payment gets to where it's meant to go, that the reporting and any billing that needs to go with it, everything's done, you know, to the utmost highest standard. And that work is heavy in many cases, and where, you know, there are regulatory mandated new systems, you know, those can be big implementations to get the right payment standards implemented in those new platforms. And then what can be done, and this is how, for instance, PayMe from HSBC was architected and built, is you can create a new experience on top of the new payment rails. And that's where, you know, if you take a cloud first API enabled platform that can be really ruthless in finding the customer problems that aren't being solved well today and designing a solution that's 10x better than what customers experience in their sort of traditional products, where banks and non-bank players can really differentiate. So it's, how do you create a platform that sits on top of and plugs into the infrastructure, but gives you the freedom to create something new and compelling, and that really lands with today's consumers.
Yeah, I think that kind of landing to the new consumers is such a key component there. But you brought up earlier, obviously, the kind of initial groundwork in payments that was created in the UK. Now, one thing we've seen in the UK is a number of kind of, if I want to use the term, speedboat banks So, Brian, why do you think in the UK we've seen a number of these fail? Has it been because there's been too much legacy from the previous brand, or is the main brand just too strong a kind of a cultural icon? What are your thinkings behind why the UK has been slow to adopt these neo challenger banks from the traditional banks?
So I think the key first question in any new platform or product that you're launching is, what customer problem are you trying to solve better than today? And so some players in the UK, if we look more broadly, have done a really good job of developing something new that better met needs versus what was out there in the market. And that's where you see the uptake. So I really think that that's that ruthless customer focus on building something new. And what tends to work less well is if you are digitizing what exists today, but haven't necessarily found that hook that delivers something that's really different. And so I think that's a consideration for, whether you're a existing bank or a neo bank that's looking to create something new, is how to find that compelling use case that really delivers that big uplift of the experience and value that the customer receives.
Yeah, that's a really interesting point. Having that hook. It's been such a long time since finance has become this kind of customer demanded kind of service. You once just got your payments, your banking done with anyone. Now you have to have that raison d'être to kind of make it work. So, Paul, would you agree with Brian there that maybe that it just hasn't had that kind of customer hook, or would you say it lends more on the tech side of things as why these speedboat banks have failed?
Yeah, I think that the digital challenger bank, Bo in particular, is a good example of what happens when you try to use the wrong technology and the wrong platform. The choices made back then and the speed in which they tried to get everything implemented led to the subsequent failure of Bo. That had untold consequences for RBS. And in particular public opinion on that organisation. And I don't believe that banks can be too strong to start from scratch with a new platform, not at all. It all depends on the choice of that platform. Going back to your first question, Doug, what technology changes have we seen in the payments industry, all of which brings us to where we are today, I have to say. But all of these changes are underpinned and available with next-gen technology, next-gen platforms. Our very own Transaxis platform achieves everything that we've been speaking about and that this industry wants to embrace moving forward. We can deliver today, and it's available today on our Transaxis platform. So the alternatives are there for the institutions. They don't have to scrap and scrap everything and start afresh. They can try. They can bring in new lines of business or new technology platforms alongside the legacy. They can adopt a hybrid model and either deploy a new platform alongside existing legacy platforms and different architectures. Even simpler and extremely cost-effective the use of cloud services. That goes without saying. It's really a question of time to market and being seen as a thought leader by their customers. After all, consumers, as I say, can switch and practically with a single click vote with their feet to move away to another bank, and invariably they will do so. Unless the banks remain agile and quick to adapt to the consumer demand.
Interesting. And Brian, speaking of that new technology that Paul was bringing up there, do you think we're going to start seeing newer payment platforms actually differ widely from what we've seen before? You mentioned obviously Swift GPI has brought in huge new innovations in the way that payments are transacted, but on a very kind of core level, do you think we're going to see the way that payments are operated from within the bank now that real time is becoming, I think across over 50 territories, it's almost becoming necessary?
So I think there's a few opportunities that are very relevant. One is being able to provide more cost efficient solutions. When you mentioned real time, a lot of my focus is on the institutional space, so providing businesses and institutions with payment services. And those can be done at a much lower price point than some of the traditional real-time gross settlement-based systems. So for banks and other providers, there's cost efficiencies that can be shared with customers, and that dynamic is alive in the market. The other one I believe that's really powerful in terms of new platforms is enabling payments as a service and more broadly banking as a service, so that as a financial services provider, you can enable other companies that would like to embed financial services and payments into their products and platforms to do so through a simple API exchange. And then that innovation can take place in many other products that go beyond your banking applications.
But old platforms, they're created 20, 30 years ago, and many of the banks are sitting on these platforms. And of course, they weren't created for today's needs. They certainly weren't created with cloud and things like that in mind. So, so no cloud, no a digital footprint, and certainly only thinking of everything as being a card transaction. That itself is a draconian thought process given today's needs. So, if you look at the challenger banks, next gen platforms that can change processes and customers' attributes on the fly in seconds, and not weeks, which is typically what some banks, unfortunately, some customers have to wait for with their existing banks. So what's gone on? It's not really about what's gone on before. It's about what's happening now, I think, and new systems, how they can help deliver innovation, how they can deliver innovation with speed, how they can help the bank stay and be seen as a thought leader and at the forefront of the needs of their customers, and at least to be seen addressing it without actually bringing everything to a standstill and having to start again. So yeah, I think today's next gen platforms can be adopted alongside what's going on today. There's no need to start from scratch, and this will enable the banks to be seen as leading edge and as industry thought leaders.
We've spent, the beginning part of this conversation kind of examining the banks, whether they've been at fault for maybe a bit of a slow move to innovation in payments. But I'd be interested in your expertise in this. Would you say that maybe actually sometimes it's been the payment platform service providers themselves that have been guilty of just kind of repackaging old concepts and technologies and not innovating as well? Because it's very easy to kind of pin it all on the banks, when actually is it the underlying tech that's been slow?
Yes and no is the answer to that. And frankly, there's nothing wrong with rebranding a technology solution which addresses and is still relevant. There's nothing wrong with that at all. But you can't continue rebranding or patching existing technology. I mean, you can keep on putting patches on an exhaust pipe, but at some stage you're going to have to buy a new exhaust pipe. But I think we've seen a significant shift in consumer demands. This has been a quantum leap for us in the industry. It's been a great challenge. It's made our industry slightly more complex and more interesting, more exciting for sure. And it's equally exciting for the consumer. As much as they're embracing it, we're having to change and adapt. So that's really, really good. That's a good thing for all of us, I think. But having said that, it's the organisations do have to change and adapt accordingly.
Yeah, I completely agree. And we have seen some issues with that change from organizations and institutions over the last couple of years. But then I guess, Brian, I'd love to get your your expertise in this, from the innovation side of things, with payment technology now changing rapidly, and the regulations around that. You can't kind of just keep patching it up, if it's leaking. So with that in mind, how do you look to kind of keep that flexibility and that future proofing that I imagine must be key for a large institution like yourselves to keep at that pace of innovation?
So a couple of angles here. One is it absolutely has to be cloud first. If we look at what's taken place, just in the last year, the need to be able to scale, both scale in terms of volume, but also scale in terms of new use cases, is paramount to succeeding in this world. And so using cloud technology to help create these solutions, I think is paramount. The other bit that is really important is partnerships with fintech players. And I think there was a view in the industry originally that fintech was threatening to banks, and some may still have elements of that view. And yet I also see it as a tremendous partnership opportunity. Big banks have large distribution capability, but often don't have as sophisticated as products. And what we often do as we develop out concepts, we will look into the industry and do scans to see who's got capability that aligns with this, and try to do some rapid prototyping and proof of concepts. And as we select these types of companies to really partner with, we'll do full source code reviews, getting under the hood of the technology itself to identify which ones we think are best suited, and then implement them into our own cloud infrastructures that we're running with the cloud providers in order to take that technology and power it through distribution that the banks can bring.
Interesting. And Paul, can I get your view on, do you agree there with Brian that it was cloud at the core?
Yes, Brian sums that up very well. Cloud is the way forward, as a combination of cloud SaaS for scalability, and of course on-premise where necessary, or hybrids of all three. The benefits being that cloud SaaS brings regulatory compliance as well as standards compliance. So that takes away quite a bit from the organization itself. So partnering, I agree, is key, and we've seen examples of that internationally. The MPP Australia, the new payments platform there, it's a shining example of partnerships with fintech. They partner with local fintechs to enable overlay services across their infrastructure, all to the benefit of the consumer and of those financial institutions. So that's and I can see on the back of that, that being embellished with open banking and immediate payments, obviously. So a Compass Plus, our next gen sees everything. Our next gen platform. We're focused very much on the use of tokenization, and I don't mean tokenization from a security perspective. Take that for granted. But tokenization in terms of objects. It doesn't have to be an ISO 83 card transaction that triggers any form of monetization. But it's this old style of thinking on legacy platforms where everything's perceived as a card transaction that ultimately affects your ability to maximize your monetization capabilities. So next gen really allows you to create innovation on the fly, deploy new lines of business very quickly to react to market trends. We've seen a lot of that in COVID period. Deploy new lines of business very quickly, and you can take, you can put them up. It's a disposable process. You can put them up and you can take them down just as quickly as market trends change, and you can't do that. And this all, is supported with scalability, cost effectiveness. It's no longer dependent on mission critical hardware or infrastructures or operational infrastructures. So it's the way forward, giving banks and PSPs an opportunity to be in the driving seat.
Yeah, and Paul, would you say that's come about because of the changing nature of how payments are now kind of conducted? There's an element of high volume, yes, but at a smaller kind of payment price point. Is that the kind of major drivers to why we're having this kind of revolution in payments within the back end systems?
Yeah, I believe we have suffered with elements of mediocrity across the industry, from a vendor perspective, and also from a banking perspective. It's a mindset which is slowly changing, and it needs to change. The cost of downtime has never been, operational downtime is significant, but downtime to your customers has an impact on the bottom line almost immediately. Ask every CEO that question, and I'm sure they'll say they'll agree with me. Last week alone, thousands of customers in the UK with the retail giants Co-op and Morrisons saw themselves not being able to, found themselves not being able to use their cards at the till. So they would only accept cash. So the customers had to leave to either use the ATM in store or find an ATM and obtain cash to go back and pay for their goods. Now, is that reflective of mediocrity? Is it reflective of complacency? I suspect it is. That should never have happened. It didn't need to happen, I'm sure. There should have been systems in place that would have averted that. I certainly know that we could have helped ensure that would never have happened today. But the client ultimately and the customers are affected by this, and they will march with their feet when it comes to any sense of complacency, I think, or mediocrity within our domain. And we're seeing more and more of it today. One click does all, and they will march and move banks if they get the sense that the banks are not willing to move at the pace in which the client needs them to move.
Interesting. Well, Brian, from your perspective, there's actually a lot of innovation that has gone on. I feel like we might have been a bit too mean at the beginning, talking about how slow payments were to evolve and adapt, but actually the future's looking pretty good. Do you think that the old kind of concept of boring old, never-ending, never-changing legacy solutions is over, and now banks like HSBC, you guys are now on the forefront of innovation like any other kind of tech company out there?
Absolutely. It's a very exciting space to work in. The opportunity to create new solutions that really move the needle is unprecedented, at least within the last couple of decades, I would say. The leaps that have taken place are very substantial. What can be accomplished, the opportunity to partner is to me a really important part of success. To Paul's previous point, where do we need to be excellent ourselves versus where can we find others that can be excellent working with us? And it is a scale game. In many cases, this is a unit economics business, and yet if you get that right and build on top of it using the technologies that now are available, there's no limit to what can be created. If we look at the payment flows in the world today, so many of them are still done in legacy applications and through obviously cash, and in some markets even checks. And I've recently moved back to the US. It's like the amount of checks was a real surprise. So, there's real opportunity. The pie is growing, and it's growing rapidly, not just from the growth that takes place in economies over time, but really the rise of digital and the internet and the economy based through the internet, is growing at such a rapid clip that the pie itself is growing substantially.
Amazing. Well, I kind of want to ground this in a bit of realism towards the end then, guys, because we've been talking about all these exciting innovations and what has been changing, and it seems like an incredible revolution in an industry. So I kind of want to bring it back down to what is actually being actioned, because we could talk about this till the cows come home. We could keep talking about brilliant new experiments. But Brian, if I could stick with you then, I'd love to hear your perspective on what you've been working on at HSBC when it comes to payments. What do you think is going to, HSBC are really going to be kind of nailing and becoming the experts in, as you said that you needed to be?
So it's definitely a space to watch, and we're working on some very exciting developments, and so it continues to be a very exciting time for us. International payments, I think, is no secret for us, is a real focal point, a real sweet spot for our customer base, consumers, businesses, how to make the world more accessible, and some of these enhancements that we've seen in domestic payments, how can those be brought into the international payment space? We did put something out there into the market at the end of last year called Global Money. And that's something that is something we'll continue to build from, and again, just an area to watch for us, and also in wallets. Wallets is an important space. In Asia, we see the rise of wallets is something that's very substantial, and real opportunity there, and a continued focus areas for us as well.
Well, I think that's absolutely brilliant, and you've hit the nail on the head really when it comes to that global transactions, global payments, because in a world where borders seem to be increasingly shutting down, it's brilliant to know that money can still be, through technology and your guys' hard work, still able to freely move about, which is going to be so critical. Now, Paul, I want to ask you guys at Compass Plus, what have you been working on, and what is going to be next for Compass Plus going into the next few years? Now we've heard about all these innovations for the last 20 minutes or so.
Well, at Compass Plus Europe, we're still focusing very strongly on our processing capabilities. We have a fantastic payments processing center, which is growing and growing. And of course, we continue to evangelize the use of next-gen technology. I mean, evangelizing is never easy when you're up against a mindset of if it ain't fixed, don't if it ain't broke, don't try and fix it. It's difficult, but it is made easier, ironically, by the quantum change that's been happening, and seeing some of the banks wanting and needing to react in order to keep profitability, at the forefront of their mind, and also to be perceived as leaders. So our innovation with our next gen platforms basically enables financial institutions, PSPs, etc., all for life in our domain to embrace what's happening today, and to do that very, very quickly, relatively simply, extremely cost effectively, and we're here to help them take control of that, and to assist them in meeting the needs of their clients today, and we'll continue to do that.
Brilliant. Well, guys, thank you so much for your insights. It's been absolutely informative for me because the industry has changed so rapidly, and it looks like it's just going to go from strength to strength. So thank you very much for joining me here today. And to all our viewers, you can catch the rest of the series and much more over at www.fintechf.com and, of course, YouTube and LinkedIn. Right, I'll see you then. Goodbye.